How's it going out there? It's December 2nd. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. So great interview set up here right now. One of your favorite all-time guests who always shares lots of ideas and really great ideas, which, by the way, are usually off the radar. Small caps, names you haven't heard of, and probably why I get the most positive responses when this person's on. He hasn't been on for a year. The last time he was on, should have him on more than that. He recommended Texas Pacific Land Trust, which you can find at Dollar Stock Club, where we take a stock from our guests. And a lot of times you don't know that stock. Could be one that I'm talking about, or could be one that I talk about before my interview, after the interview, so offline. And we throw it in a Dollar Stock Club portfolio, which has a great performance. Allows us to track a lot of the guests as well. So we're putting the right people in front of you and the right ideas. And that's Dollar Stock Club, which is only a couple hours a month. It's one of our best products. But the last time Chris Mayer recommended a stock on this podcast, Texas Pacific Land Trust, up 150% plus in a little over a year. Chris Mayer is a close friend. He is a former investment banker. He used to write several newsletters, which is how we met in the industry, but is now managing money at Woodlock House Family Capital. Has been managing money pretty much the whole time. He's been a newsletter writer for a very long time. Chris is one of the smartest analysts I know. He speaks at the Value Investing Congress, which is a venue that you're only going to see the highest profile hedge fund managers, money managers. I've used to attend this a lot. I think it's, a couple of grand to attend to get ideas. Now everything is covered, even Ira Sohn, it's covered where you know the ideas right away. It doesn't even pay to go to these things. Maybe a little bit of a network opportunity, but Jim Chanos, a lot of these guys, they're not there to mingle too much. They kind of sneak out the door. So I haven't attended those as much anymore. But to speak on that platform just shows you how great of analysis, how much credibility he has. He also travels more than any other analyst I know in an effort to find the next, not 10 bagger or 20 bagger, but 100 bagger, which he has done throughout his career. Chris Mayer, thanks so much for joining us on Wall Street Unplugged again. It's been a while, man.
Hey, good to be on with you, Frank. It has been a long time since we talked last.
It has been. The last time we spoke, you gave out a stock pick called Texas Pacific Land Trust, and it's one of the stocks my late dad recommended about 30-something years ago in the single digits. But that stock is up 150% since you came on, just to let you know. So expectations are super high right now for you.
Hey, yeah. And that, it's come down quite a bit from its high. So actually, I still think it's a good buy.
No. And if people are not familiar with you, right, because we're getting a lot of new listeners every month, Chris is one of the people on this podcast I've interviewed for many, many years. And I could promise you one thing, again, putting the pressure on him, but he's always given us ideas that are off the radar, well off the radar.
Yeah.
Small caps and things like that, which is really cool. So, a lot of people love when you come on, and we'll get to those ideas later on. But I guess let's start with this, right? With the market conditions where, we have new COVID fears now, inflation 30-year high, labor shortages. We have supply constraints as well, expensive valuations. Yet we have a Fed that continues to be pedal to the metal, low interest rates, still buying bonds. Is it difficult finding new ideas in this type of market?
I haven't had a problem finding ideas. There's always things I like. I think what the challenge comes in finding an idea that clears, everything. So yeah, there's things that I'd love to own, but they're a little expensive. I don't think valuations are necessarily, outrageously expensive. It really depends. It's hard to generalize. I mean, in some of the hot areas of the market, it's outrageously expensive, but there are other areas where I think you're getting pretty good prices. Especially if you have a long-term outlook. So, I still think the environment is still pretty good for equities because of some of the things you mentioned. Interest rates are still very low. There's a lot of stimulus money floating around out there. Earnings have been pretty good for the most part. That's what I've seen. And, I think there are some pressures. The labor and inflationary pressures are definitely top of mind right now. And even just on earnings calls, everybody talks about it. Everyone's talking about the price of raw materials going up or the price of labor. So those are things that I don't think they're going to go away anytime soon, but that's definitely a headwind.
So the things everyone's talking about, and someone like yourself has been doing this for a very, very long time, when you're talking about it, does that mean it's really factored into the markets, or maybe we're not seeing massive inflation factored in where it can go, get a lot worse than this? But the fact that, a lot of these companies have pricing powers, they're dealing with it, they're able to cut costs in other areas, and you're seeing earnings surge. Is this kind of being priced into the market right now?
I think so. I mean, if we're talking about it, it's priced in. That's the general rule of thumb. Now, as you say, the market's not pricing in any kind of extreme scenario. I mean, look at the bond market. The 10-year Treasury is still sitting there at 1.5 roughly. So obviously, a lot of people are not worried that it's going to be sustained or that it's going to be particularly strong. So that would be one surprise if we did have that. I think that's not priced in if we have a 1970 style inflation.
Yeah, no, I hear you. So let's get to a couple places that, you like to look at. And before we get to small caps, which I know you love, I want to get to emerging markets because I've been told by a lot of people who are smart, invest in emerging markets. And if you look at that strategy, even go back 15, 20 years, it's kind of has not been a winning strategy, right? Emerging markets is sitting at right now today, they're sitting at 20-year lows compared to U.S. equities. Developing nation stocks are 40% cheaper than the U.S. What's going to change where investors should be, allocating capital when we see our market, everybody runs to it, right? When you have fears, everyone goes into the dollar, everybody runs here. And we have tons of capital. We have a great system here, but I understand stocks are cheap and you're better off going over there and you're still seeing some growth there, but that strategy does not work. What's going to make it work going forward? And for guys like you, I'm talking about just the emerging market index, right? So you're a person who travels a lot that may invest in certain countries or different things where you easily outperform. Right. But overall, it hasn't really been a good strategy, say for people in the 401k who select emerging markets, in their Vanguard fund or something.
Yeah. Well, when you say they're cheaper, I mean, they are cheaper, but they deserve to be cheaper in most cases. This is one of the things that I always point out when the media or anybody, they talk about a certain market being cheaper and they'll say, oh, the UK index is so much cheaper than the US index on price to earnings. But you look at the components. I mean, the UK doesn't have a Microsoft and Amazon, Facebook and Google. They don't have those. They've got Royal Dutch, petroleum companies, and they've got banks that are heavily weighted in the index. So that draws and pulls down the valuation of that index. So in emerging markets, it's often the same. I mean, a lot of emerging markets, they have basic industries or they, financials or energy, and those things carry lower multiples. But there are some markets that really have outstanding companies. So this is where someone like me, who's more focused at looking at individual securities, will see something different than someone who's just looking at indexes or, as you say, pushing the button for emerging markets allocation in their 401k. I've spent some time looking, for example, at companies in Poland. And there's a lot of really good companies in Poland. And in fact, we own one, a grocery store in Poland called Dino Polska. And that's a terrific company. I mean, returns on capital are 20% plus. They've been growing. They've been public since 2017. Stock's been up a whole bunch. It's been a terrific performer. The chairman owns like half the stock, so you've got a big insider there. And what they do is it's fresh meat and groceries in very small towns, and so they don't have a lot of competition there. They buy their own real estate, and they have a kind of a little bit of a competitive advantage there from the bigger grocery stores that aren't able to get as close to the customer. And that is just a phenomenal company. I mean, and again, that's in emerging markets in Poland, but these are the kinds of opportunities you can find if you're willing to go a little bit off the beaten track and willing to, get outside those big indexes.
Well, I was going to ask you about, different countries. You travel a lot. I'm sure that's been restricted because of COVID, but you travel more than anyone I know. People say I travel a lot. You travel much more than me, especially around the world, different countries. Outside of Poland, is there other areas that you're like, hey, there's some opportunities that really look good here? Or is it kind of, again, you look from a bottom-up point of view, so you found a couple of ideas. You just mentioned Poland, but I was just curious if there's any other places that you've gone to that you're like, wow, there's some good ideas here I need to look into.
Well, I mean, I haven't been there yet, but it's top of the list for me to go to next year, and that's Sweden. Mm-hmm. So, Sweden has a number of really strong compounders, companies that are just every year putting out great results, and they've been phenomenal investments. So one of these companies called Lifco, There's another one called AdTech. There's one called Lagerkrans. These are just a few. There's a bunch of them that have done very well. And so that's, that's something that's not necessarily specific, like you're making a bet on Sweden or something, because these companies do business across Europe and even in the globe. But for whatever reason, Sweden has this sort of culture around capital allocation where these companies are all very similar. They all have the same focus on returns on capital. They're all very disciplined about that. And the returns on those stock prices have been phenomenal. So one that I like a lot now, because it's come back quite a bit off its highs, is a company called Evolution Gaming. It's a live casino so it's all online, and their customers are casinos, and they provide basically a service where you can have, have a live dealer online dealing they also have their own proprietary games. So it's quite a technical product, and it's very popular. They are, if you look at like the top 20 online games, like 19 of them are Evolution games. They really dominate the space, and their returns have been phenomenal. And that stock has come down a bit over concerns of how much of their business is perhaps in these gray market areas where it's not legal or illegal. And then there's some concerns about, how much illegal betting might be going on their site. But I think these things will eventually blow over. I think that industry has a great future, and Evolution is the leader in that business. So, that, again, this just to give you kind of examples of things that you can find in certain markets. I mean, Evolution is a unique asset. There's nothing like that anywhere else. And, you can find that just poking around. And again, it wasn't necessarily that I was attracted to Sweden because I thought, oh, gee, it's this market that's growing X%, and there's something necessarily that attracted me. It was more of a bottoms up thing. I found a company there that did very well and had this kind of ecosystem. And as I do research on that one and talk to other people, they refer me to yet another one. And I start to cobble this list together of 4 or 5 or 6 of these Swedish companies that, are amazing. And so that's how I get pulled into certain countries.
So going outside of that macro view, I want to talk about small caps, because I know this is, what you love to do. You're just finding these hidden gems that nobody's really talking about. And you actually wrote a book about this. It's called 100 Baggers, Stocks That Return 100 to 1. And the most important part is how to find them, right? So it's right here on Amazon. Right. Nice plug here. But it's relative to our conversation, because I think the most important thing is when I see that the title is 100 to 1. One, I'm very interested in how you find these names, considering a lot of good names, Chris, even today, the good growth names. I mean, they'll come through SPACs, which the valuations are incredibly inflated. I don't know if you saw the numbers, but as of, I think Barron's put out a report, or somebody else, that 49% of all the IPOs this year that came in over $1 billion are now below their IPO price. So the inflations are so inflated, where these private companies and SPACs, I mean, you see 50 to 100% being valued at 50 to 100% even higher just 6 months later when nothing's really changed, right? Because of the marketing campaigns. Right. And also companies like Snowflake that go through the IPO process. Again, these names are coming out inflated valuations. So I'm curious to know, the 100 baggers would have to come from small caps most of the time. How do you find these names that are under the radar? Because when they do get on the radar, it seems like the big investors get in, venture capitalists get in, they really inflate these valuations and try to take them, public a certain way or whatever. So I'm curious to know, how do you find these ideas that can have that much upside potential?
Yeah, well, it's interesting. That book had, doing the research on that book had a big impact on my investment style, because I came to appreciate a number of things. So this book was based on a study that I did of all the stocks that had returned at least 100 to 1 since 1962, and kind of tried to pull out what things they had in common, what lessons we could learn. And, you learn a number of things. One is that these companies typically all generate pretty good returns on capital in some way. So that's kind of a generic term, but, think about return on equity, return on assets, return on capital. Your listeners could Google some of these terms, but those are the things to focus on, and the ability to generate a high return, and then the ability to reinvest it. So it makes sense when you think about it. If you have a business that you put $1,000 in and generates a profit of $500, that's pretty good. And then if it could take that $500, reinvest it back in the business and earn 50% again, that's where you really start to get that compounding effect. And a lot of these 100-baggers, the ones that I've studied, were able to do that over a sustained period of time. So let's say if you do 25% return on capital every year, you're going to, at 20 years, you're going to be 100-fold. So that's kind of like the formula. And most of them is kind of like a bell curve. So the number one rule for finding them is you're going to have to focus on businesses that generate or promise to generate a high return. I would say that combination of, and then growth. You mentioned this is why staying with smaller companies is more interesting, obviously, because it's going to be difficult for, say, an Apple to be a 100-bagger at this point. It may be a very good investment, but you're going to have to start small. If you want the oak trees, you got to look for acorns. That's kind of the analogy. And so how do you find them? One is I would tell people focus on those returns, or at least prospective returns. But the amazing thing about a lot of these 100-baggers is that you had years and years to buy them. So one of the case studies in the book is Monster Beverage. And you could see Monster Beverage generated high returns on capital and good growth for years. I mean, you could have bought it for years and still made any day for a number of years and still made 100 times your money. So that would be my best advice, is to find them, is to try to stay small. And small doesn't have to be microcap. It could be, something I would say ideally $1 billion market cap or less, and focus on those high returns and think about whether that company has the ability to reinvest. And the key part of that formula also is that a lot of investors get hung up on, present dividends. And if you really want to invest for those multi-baggers, you're going to have to, leave the dividend payers aside. What you really want, again, using my very, very simple analogy, if you had a business that you put $1,000 in, gives you $500 profit every year, and then has the ability to reinvest it, that's better than a business that has $500 profit and then just pays it out to you in a dividend. Because if that business can earn a 50% return on its capital, you want it to take it and reinvest it. You don't want it to give it to you, because you're not going to be able to, you're going to pay taxes on the dividend, and then you're not going to be able to generate a 50% return yourself. So that's an extreme example, but in the stock market, that's what I'm looking for. And I have a portfolio full of companies that earn, 20, 30, 40% returns on their capital and have the ability to reinvest it. So over a long period of time, that's going to be a winning formula.
So I know that's not the only formula. How important is it with management, right? Because if you have a small company, you have to be willing to innovate, even if you have the greatest idea, right? We saw at AOL. Critical. I mean, that was the search engine. That was the way to get on the internet for everyone. You look at Research in Motion. They were basically the inventor of the smartphone, and look where they are now. They don't even make smartphones anymore. How do you visit management team personally? I mean, how do you decide, hey, these guys really know what they're doing? I mean, what's that process?
This is a critical thing, because you can have a management team can destroy a good business by either, they can acquire something that's worse. There's lots of ways to screw it up. So there's a number of things to do. The first thing is I would stress for every investor is to look at the proxy. So this is, it's a filing that all companies in the U.S. have to do, and see how much stock the management team owns. That's your first filter. You want to invest with people who have skin in the game with you. And they're more likely to behave as long-term owners of the business because they are long-term owners of the business. And so in my fund, for example, that's a bar that screens out a lot of names right off the top. I mean, we want to invest with people who have skin in the game. And then the second thing is look at how they're compensated. I've turned down some very promising companies just because compensation was excessive. You look at some of these companies and it's egregious in terms of options and dilution, and becomes quite a drag on the company over time. And that's also indicative of a kind of greed that you'd rather not see. You'd rather have a CEO that pays himself relatively modestly, but because he's invested in the stock with you, that's how he gets his reward, primarily as the shares appreciate, which is the same way you get rewarded. Mm-hmm. So those are two things that I think are important. And the third thing I would say is, look at the company's literature, look at its own annual reports and annual letters. Does the CEO write them? And are they thoughtful letters in the sense that do they really give you a sense of what's going on in the business? Or do they just seem like, marketing speak that someone put together, just regurgitates the numbers, has all kinds of buzzwords. Those are also another key distinction. You're going to find that as you do this, you're going to fail a lot of management teams because that's a tough hurdle to get over, especially in small cap land where I would say as a generalization, the management teams are not as good as larger cap names.
I'm so glad you said that. It's a point that I've never brought up to my subscribers and listeners is when you go through those comments, and this is available to everyone, right? 25 years ago, 20 years ago, you didn't have access. Only the analysts had access to this, right? The conference calls, the quarterlies or the annual reports. I mean, you had to mail or whatever, get them through mail. But it's so funny you say that because I know immediately because, I've been doing this for a while. You've been doing it for a while. But if the CEO's committed, if you like him, you're like, wow, this guy's really, really... Like, I loved Reed Hastings because he wanted to go after Blockbuster and destroy them. And that's what his call was about. He said Blockbuster more than Netflix back in the day. And I was like, wow, this guy's really motivated and competitive.
Right.
But it's interesting that you say that because you could see that pretty easily, right? It seems like, maybe I have to read a lot of transcripts of these conference calls or listen to a lot of them. But you could kind of see it and feel it, right? If the CEO's all in and if this guy's are excited about their growth potential.
Yeah, you can see it and you say to yourself, wow, this guy gets it. There's some classics out there. Mark Leonard doesn't write shareholder letters anymore, but Mark Leonard of Constellation Software is a classic example. All his letters are still online, but go back and read those. That gives you an example. What does he talk about? He gives you the important things you'd want to know as a shareholder. There are other guys who write great letters. I mean, Jeff Bezos writes a good, thoughtful annual letter, and he tells you about things that are important in the business. It's not just a bunch of slick marketing speak. So I'm sure you have examples as well as favorite CEOs, but that's definitely a tell, one among many that I would look for. Combine that with ownership and incentive comp, and you can do a pretty good screening on management just on those three things.
No, I hear you. And I wanted to go back really quick before we get to some of your favorite ideas in this space, is the return on investment capital part. Has the world changed? Because, and I'm talking about the last 15, 20 years, right? Because you've done studies going back to the 60s to see, which companies had became 100 baggers. But has the world changed to the point where the business model today seems like we don't care about profits at all. What we want to see is growth on the top line, and we want to see you add as many people as possible. I mean, this is, for all the social media platforms, right? Just continue to add, even Twitter. Twitter started falling when they started monetizing their list, and they monetized their list amazingly, much, much better than Facebook did at the beginning. But once they stopped growing that list, that's when the stock really started taking a hit. But it seems like the business model is grow at all costs, get as many people, and then we'll figure out once we have all these people on the platform what to do. Does that make it a little difficult for you? Because it seems like that's the new playbook for small caps, which may be difficult to really measure return on investment capital sometimes.
Yes, it does. I would say, there are a lot of businesses that I'm just not going to be interested in. And so those kind of businesses that you talk about, where they're just they're not thinking necessarily of profits now. Not that can't work. Obviously, in some cases, that's what they should be doing. But those are kind of outside my box. I mean, I like to see things that are generating profits now, generating cash flow now, generating good returns on capital today, and that has very good odds of being able to continue to do that for, a decade. There's a lot of ideas, a lot of ways to scale the mountain. I'm not saying my way is the only way or the best way for everybody, but, you have to kind of figure out what you like to do. And for me, I'm just not going to be involved in a company that is losing money now and is adding lots of customers with the promise down the road that they're going to then be very profitable. But I'd say there's a lot of things that have changed. I was thinking about this, Frank, because we've been in the business a long time, but things have changed a lot, even just in, say 20 years. I was thinking about the growth of passive investing. I mean, this is something we really didn't have at all 20 years ago, even 15 years ago. There was still passive investing was a very small kind of part of the pie, and now they just dominate. If you look at almost any company and you look at the top shareholders, they're, ETFs, and that changes things. I mean, what does that mean? That means suddenly you have large amounts or large portions of the shareholder base where they're blowing in and out of the shares, not really based on any fundamentals of the company at all. When somebody like JP Morgan reports earnings, most of the shareholders couldn't care less. They're ETFs. They're just there because they're handling the flows in and out of an ETF. And it also comes out sometimes with governance issues. So we mentioned Texas Pacific. That's kind of an interesting example. So for a long time, because it was a trust, it was off limits for institutions. And then they changed to a C Corp. And now they're eligible to be owned by the ETFs, exchange traded funds, and the volume has just shot up enormously. And suddenly you have large shareholders in there. They're passive investors, and these passive investors are also not particular when it comes to governance issues. So, they tend to just vote with management on proxies when their proposals come up, and it makes it. I think it's going to be more difficult to govern some of these companies, and if you have such a large shareholder base that seems so disengaged. And so that's one area that I think has changed a lot, not to mention just business models generally like you're talking about, but also structurally in the market. So much of it being passive, it changes things.
Now I'm going to ask you a fun question, which I probably know the answer to, but have you looked at cryptos at all? We're talking about, a market where you're not getting an equity stake. It's hard to even find any information out, right? So fundamental analysis throws out the window. With that said, I mean, the moves that we've seen in Ethereum and Bitcoin in some really good technologies here, right? So maybe not so much of company, but more of system-based, even the Litecoins and stuff like that. Is this something you look at? Because this is one area I know where you could see 100 times returns probably quicker already any other market I know of, right? But is it all, a lot of it is BS. A lot of people are going to get hurt. They don't tell those stories. But I'm just curious, have you crossed over and said, hey, let me look at a couple of these names because these gains are matching, which the title of your book is.
Yeah. I don't own any crypto, any of the currencies or coins or tokens or whatever you want to call them. But, I paid attention and read about it. I think one of the most interesting ways to invest in that is the mining operations that are mining the coins. So we have a private investment in a mining Bitcoin mining operation, and the returns on that thing are phenomenal. I mean, you're talking cash margins of 80%. So that means generating $1 million in revenue after all your cash expenses, you've got $800,000 in profits. And that on an invested capital base, that's probably, let's say, maybe a quarter of $250,000. So it's mind-boggling. The returns in that space, and the problem is there's not, it's hard to scale those businesses. Mm-hmm. So I don't know how that kind of investment will do publicly, although we'll see soon because there is a Horizon Kinetics is taking a mining operation public sometime this year. So that will be an interesting one to watch because they're credible people, integrity, et cetera, et cetera. Mm-hmm. And so I think you could, invest in something like that probably safely. But, you mentioned a point that is a problem is that anytime you have a boom, you bring in all the, the fraudsters and the touts to take advantage of it. Mm-hmm. And we certainly have that. I mean, and it's an absurd, irrational market in a lot of ways. I was reading today or yesterday about one of the coins is called Omicron, named after the COVID variant, and the stock's up like not the stock, but the crypto assets up 10 times, or something like that. And of course, how does that tie in? It has the same name as the COVID variant. Why should it be worth 10x more than it was before? So that there's bizarre stuff like that that goes on. But blockchain as a technology, crypto as an asset, I'm not ready to dismiss it totally as just something that's going to go away tomorrow. And so I think the more interesting ways to play it for somebody like me would be the mining, which I told you about. Or some other ways. Maybe it'll be interesting to own, an exchange or something like a Coinbase at some point. I don't know.
Yeah, and I love getting your opinion on it because you can get opinions from various people, various sources. But the fact that you are like a hedge fund guy, valuations and stuff like that. I love. Some people are just quick to dismiss it, and others have come back. But I see it, right? Because it's very difficult to find information on these things. Now you said you're buying it. Is this for like the bond portfolio? Is this for the family office or?
Yeah, family office has a private investment in a mine. Yeah.
Oh, that's cool. That's cool. And you still doing anything with Bonner or no?
Well, no, I mean, only thing I do now really is I run Woodlock House. This is
Woodlock House. Okay.
my fund, yeah, and so that's all really I'm doing. Yeah, I occasionally will work with the Bonner family on certain private investments and things too.
Mm-hmm. Yeah, it's cool because Bonner is he's worth a little bit of money. He's I'd say, right?
Yeah,
but
right.
He's one of the founders of Agora, and we've all worked for
yep.
one another of those newsletter companies, and great company.
Very wise fellow, I should say.
Yeah, no, definitely. So, okay, so let's get to the fun part here and go over some of your ideas that you like maybe in small cap world, because people are going to expect these things to go up 100x by tomorrow once you give them to them, as you know.
Yeah. Well,
what are some of the names that you're looking at that crossed your radar and say, hey, this has a shot? Right? A lot has to go right for it to go up 100x. I mean, this is, it's just continually innovate and whatever. If it's intellectual property, I mean, everything's got to go right, because even if you see this growth, some of these things could get bought out, right? Which kind of kills.
Right.
That could hurt you a little bit, right? You'd like to see these things really, grow into their valuations. But what are some of the names you like?
Yeah, I mean, on the small cap stuff, there's a couple, but I don't want to give those away just because not yet, because it's still
okay. Fair enough.
But I think a couple of my favorite ideas now are actually a couple that I mentioned. Mm-hmm. So I really think Evolution Gaming is going to be interesting at this price. And with the growth that they have, a year from now, I think that stock will be quite a bit higher, especially as some of the turmoil and concerns over gray markets and start to fade and the company's results start to take over. I mean, that is a phenomenal business. And so that's one. I also mentioned the Polish grocer Dino Polska. And that's another business growing 20% clip a year. It's come back a little bit. Another one that's come back a little bit off its highs. I think that's a really interesting play. Again, the underlying business there is strong. I mean, we're talking returns on capital well over 20%. They're reinvesting all their cash to open new stores. And that one should run yet for a long, long time. And then the third one is one we mentioned, which I think still is attractive now. And again, it's also come off its 52-week high quite a bit. And that's Texas Pacific. So Texas Pacific, oil. The nice thing about Texas Pacific is you're not 100% dependent on the price of oil, because over the long term, if you look at, say, a 5 or 10 year period of time, the price of oil has actually come down. And Texas Pacific stock's up, multiples of what it was. So again, the underlying business there is also really strong because they are only involved in royalties. They own the land and other people do all the work of the drilling, and they just take a little piece off the top. So it's high margin, free cash flow that requires very little in the way of reinvestment. And so I think that one will take another leg up next year as we get going. Also, they have a very promising water business underneath, where fracking requires a lot of water, and they have the ability to provide water for drillers there, and that business has been very profitable for them. So all three of those ideas, I think, are poised to do well next year and beyond, really.
Yeah. So Evolution Gaming right here. I just want to just pull this up really quick. So this is it, right? This is the symbols EVVTY, right? I think you could buy it here.
Right.
So,
that's it. Yep.
Yeah, and about 50% off its highs, but a lot of these names have come down, and it is, I guess we'll end it there, because it's been a really crazy market where I think people see, well, we're closing on all-time highs, and this was before, the stock market really came down on Friday, but it's led by a lot of these big names, where the underlying names in small caps and also in mid caps, you're looking at a lot of names are getting hit pretty hard, 20% plus. I guess it's leading to more ideas, things like this, right? But it's been a crazy market over the past, I'd say, 2-3 months. The Russell's actually down over a 6-month period. People don't realize
I was going to say that exactly. The Russell's actually down. So it's been quite a spread. And even among some of the bigger tech names, I remember seeing a list like, things like Peloton and Wix and just all these stocks that were high flyers are down 50% or so from their high. So, depending on where you fish, there's some interesting things to at least consider.
No, that's awesome. So, Once again, Chris, I want to thank you for coming on. If you want to buy Chris's book, you can go to Amazon and do that, and I'll pull that up for everybody for our YouTube page, which is 100 Bag Stocks. That return 100 to 1, and how to find them. But the how to find them is so important, which I love, where you're really explaining that in detail, and it's really, really good stuff, Chris. So, look, I want to thank you for coming on. Sorry it's been so long, man. It's been really busy on my end, but I'd like to have you on a little more because I always learn from you. I guess I'll finish with this really quick, Chris. Are you planning on traveling any place or going to conferences? Because I know you were speaking at Value Investing Congress, which is, which is an honor in itself, but a lot of these stuffs are so virtual. I was wondering if some of this stuff's opening up for you.
Yeah, I don't plan to speak at any conferences, but I do have a travel itinerary I am developing now. So I mentioned Sweden. I'd like to get to Poland in 2022. I'll probably get to Ireland. But yeah, I mean, we have this new variant, so who knows? We'll have to see what that does. But I plan to hit the road, and we'll see.
Really good stuff. So listen, thank you so much for coming on, Chris. As always,
always good to talk to you, Frank.
We'll be in touch, sharing ideas. But if you need anything on my end, please feel free to give me a shout. And again, I know the audience really loves you. You're one of my favorite guests, and thanks for coming on, buddy.
Oh, very good, excellent. Hope they enjoyed it, and hope the stock picks perform. We shall see.
We'll see. We'll bring you back on for that.
All righty.
So Chris is an awesome guy. Just laid back, fun, very, very smart. I think you should definitely buy his book. I think it's like $10. Again, I don't make anything by saying that, but I mean, Chris is not only smart, but he's also a fantastic writer, and that's why he's written so many books. And when I say fantastic writer, a lot of people write books, but Chris is able to take complicated things and dial them down to where anyone could understand them. And that's important because a lot of times he's traveling all over the world, traveling to different countries. He's finding these new ideas and, explaining technologies. This is things that I've done with my career. I mean, that's pretty easy if you talk about Netflix, right? But you try talking about one of my recent recommendations, which was a biotech company, a small cap biotech company with a $200 million market cap, man, and you get into their technology and you try to make that sound very easy so everyone can understand it. It really is an art. I've been fortunate to have great teachers throughout the Agora system. Chris was trusted so much. He was managing the family trust for Bill Bonner. If you don't know him, Bill Bonner, which we talked about a little bit, was one of the founders of Agora, which is the largest financial publisher in the world. I think it's close to like 30 plus divisions or whatever it is now. But, I've learned a lot, and I credit those guys a lot for some of the marketing things and how to market myself and how to build a business, which helped me tremendously when launching Curzio Research. But that's the guy they selected and say, hey, you know what? Bill's like, I want you to manage our portfolio. So it just shows you the credibility there. But in his book, he describes not just, his opinion, right? Well, I think this is going to happen. No, he has a lot of data behind all of his research. And like he said, it went back to 1960, whatever he said. But he'll go back and say, listen, this is the formula that works. Here it is. And he builds on that formula going forward, willing to adapt. And that's one of the questions I threw at him, right? I was talking about, it's a different market now. Valuations, these companies come out at $100 billion valuations. How the hell are you going to make 100x on them? How are you going to make 5x on them? So you have to adapt with the ever-changing times, but, he's got a good knack for this. He's very, very smart, has great connections, and again, he's a great writer, but you'll learn a lot from purchasing that book if you buy it. Again, it's $9. You don't want it, don't buy it, but the value that you get, and I don't promote books a lot. I really don't. Some of them I do, especially investment books, because I think they're all a waste of time. I think a lot of the strategies are too old. I think you can learn a lot more from reading the Wall Street Journal, following this podcast, following real-time information. Because we're in an ever-changing market. And people want to cite, well, historically this, historically that. You don't throw away historically. I mean, we're in uncharted territory right now. I mean, it's $10.5 trillion in spending, zero interest rates. Now with this new virus or strain, the Fed's not going to touch rates and not going to, stop buying bonds or tapering anytime soon, maybe a tiny bit, but we're in uncharted territory. I mean, everything's different now. To look back at history and where we are today and how it's going to play out, forget it. It's a waste of your time. I mean, if you did that, which a lot of people did, and even I did in 2010, 11, after the credit crisis hit, you lost a lot of freaking money because you're like, wow, this market's going to crash. You had no idea the Fed was going to keep interest rates at zero forever. We had no idea. We're like, we're just trying this policy out just to see what happens. What do you think happens? Massive amount of capital flows into the markets. I mean, you have kids for projects that aren't even off the ground, and crypto raising $10, $20 million right now because money's so cheap, right? So investment books, from my perspective, I think are a waste of time. A lot of them, you could learn from some of them, but for me, I a lot of times I read it and it's stuff that I've talked about in the past. It's, I'm not learning anything new, and that's my perspective. That's my opinion. Maybe you want to read a million investment books, but I can tell you, people who are just reading all these investment books, you don't see them become much, much better investors. You don't. It's about, learning, getting in there. It's a grind, getting your ass kicked in certain stocks that you have conviction in and what you got wrong. That's how you learn in this industry. But, Chris's book kind of explains that, and he shows the data behind it. And this is some of the things you need to focus on, and then you can go your own way with it. Okay, here's this, and I want, access to crypto markets, which is a way I think you can get 100x gainers, where we got 30, 40x gainers in our crypto intelligence newsletter, which, by the way, that issue is now available for you guys with our new pick. But, Chris is a great guy, great analyst. I love talking to him. I have a lot of fun, and I made money personally investing in some of his ideas. So he's a name that I trust. It's a name that also made you money if you listen to his ideas. Not all of his ideas go up. I've had a couple of ideas that didn't do well, just like everybody else, but he's the first to let me know about them and say, hey, this is what changed or whatever. But, overall, his performance, his track record is really, really good, and he's a great guy and very, very smart. So he's a good friend. Glad he came on. Hopefully we'll get him on maybe every quarter, right? Discuss some of his ideas. So guys, that's it for me. Last thing here, this will be the last week. We're offering Big Money Trader at a steep discount where you pay for 1 year and get the second one for free. This is Luke's new newsletter. And I feel like we haven't done a good job explaining this, to be honest with you, because this is a product that I'm extremely proud of, and why it's based on options and option strategies. But Luke may be the smartest person anyone knows when it comes to options trading. He actually taught option classes on Investopedia. And he got that job because he's fantastic on video. And like I mentioned with Chris Mayer, he breaks down things, like complicated things, and people get nervous about options and are like, I don't know if I can understand it. He breaks it down on video exactly how to implement these strategies. Very, very simple terms. Plus, he has an amazing track record. But option trading for Luke is kind of like Michael Jordan. Basketball is to Michael Jordan. Jordan's athletic, probably would have been a professional baseball player, believe it or not. Yes, people disagree, but a lot of people agree. Some people agree, at least I agree, that if he would have just followed it through, he could. I mean, he's batting over 200, which is like, man, I think that's the average now, the average in baseball or whatever it is. But his passion is basketball, and he's the greatest at it, right? You saw that. Luke's passion is options, right? So he's one of the best at it. And it's a bold statement coming from me because I've been in this industry for a long time. I know a lot of good option strategists. But this is a newsletter he always visioned when he came to us. And I said, okay, let's start a smaller file, build up your audience. I said, and then we'll go with this, because this is his dream to have a newsletter like this, where the upside potential is enormous while using these strategies. They're going to limit your downside risk. But imagine investing in Netflix, Apple, Tesla early on, right? That's what his system does. But now imagine investing in those names and you own call options throughout their entire growth phase. I mean, now you're talking about accelerated returns beyond belief. And that's what he's done. That's what he's done for his career. And he's now sharing this strategy with everyone, which includes all Curzio Research followers. So, for me as a business, I'm very happy. I launch products that I think are going to benefit you. You're going to educate and make you money, and have great people there that are going to teach you. And this checks off all those boxes. But we do have a fantastic offer on it. It's not going to get cheaper than that. It's going to go away next week. But if you're interested, go to CurzioResearch.com, click the banner with Luke's pretty face on it, and you can go there. And if you're still on the fence, go watch his video. Because I can tell you, we haven't had a lot of people watch his video, but we track all these statistics, right? Being open with you. The amount of people that watch his video and then subscribe is probably the highest rate we've seen as a company. So as soon as I watched that video and understood and saw his passion, right, and you could have a better idea of his strategies for option trading, the more people that took him up on that offer. And it's a high percentage of even some of my videos or some of the promotional things that we do, because you see it, you understand the strategy, and you go through it. So even if you're on the fence and you watch that video, if you purchase a newsletter, that's fine. If not, no worries. For me, this is a great product. We launched the Curzio One members who get this for free and got amazing feedback from them already. But it's a strategy, I think, in this market that's extremely relevant. I think you can do very, very well. That's why I'm pushing this thing. And, I'm really happy we launched it. I'm happy Luke came to us to launch this thing, because this is his dream product. And we haven't done a great job saying, it's Simpson-based or whatever, but this is something that I think everyone's subscribing to, which, you could learn from his his other newsletter, right? I mean, he's got tons of subscribers that signed up, and the response has been overwhelmingly great. So now launching this product, we're just really excited. Big Money Trader, and so it's on sale now if you're interested. If not, no worries. But very, very excited to launch this product. I think it's going to do you guys very, very well long term, because now it's an option market. Option strategies are dominating right now. Record contracts everywhere on these exchanges. And a lot of people are requesting and asking, hey, I want to learn more about options. So this is it, right? We listen to you. We launch newsletters accordingly. And this is a newsletter I know a lot of you wanted. I know Luke wanted. I think it's a great fit. And it already is a great fit based on the feedback that we're getting. So again, interested, go to curzioresearch.com. Questions, comments, feel free to email Frank at curzioresearch.com. Appreciate all the support. As always, I'll see you guys next week. Take care.